We are now in conversation with the management of CG Power post reporting their Q1 earnings. Revenue growth was strong at 14%. But let's talk a little bit more with the management. Amar Kaul, the group CEO and managing director, now joining in. Mr. Kaul, very good morning to you, sir. Thank you. Revenue growth was strong at 14%. But let's talk a little bit more with the management. Amar Kaul, the group CEO and managing director, now joining in. Mr. Kaul, very good morning to you, sir. Thank you so much for joining in. Just the first question that, in this quarter, you've seen a 14% growth in terms of revenues, but margins have taken a knock. So your gross margins are down by 130 basis points. You've implemented some price hikes in the industrial segments, but are these largely challenges led by raw material? What was some of those key aspects? Because the street had a lot of estimates built in at this point of time, and some of those, comparatively mention that there has been some miss in terms of profitability that's led by this, fall in gross margins. Would you hazard a guess as to what, apart from raw material, what could have been the concern?
So thanks Puneet, for having me here, and a fair question. We have to segment the numbers into standalone results and the consolidated results. And I think what the numbers you're talking about are the consolidated results. And there are a couple of factors. I will not go into raw material. That's a standalone issue. So the issue is primarily the semiconductor business that we have. Obviously, it's a long gestation period. So that's going to take some bit of time, and we are invested heavily into the talent because it's a new business for the country. And second is our Gg-tronics, which is into train collision avoidance system. So there has been a delay for approval from the railways, which is very close to happening now. Hopefully, this quarter we should be there. And with those two things coming back, I think the consolidated numbers will start moving up. But if you go back to your standalone business, which is our steady state, whether it's motors, transformers, switchgear, consumer products, I think most of the businesses have done fairly well. Other than the one-time issue that we had in the railways, otherwise, most of the business, even motors, we have been able to fairly, reduce the impact of inflation that happened because of different raw materials by passing it on to the market in terms of price increase. So I think converted numbers still look, the profitability is still better than it's better than the growth that we had, about 15% on consolidated basis. And I think if you put together, I think a quarter or two, I think we should be in a much better situation.
Mr. Kaul, the other factor, and point taken on those one-offs as well, but the power system business now that has been growing at a very higher click. Your order backlog is also, I think, up 59%, if I'm not wrong, in this business. Now, how are you looking at, the current state of affairs within the segment? Because, we've seen explosive demands for HVDC's products as well as the products that you offer in the power segment. Is the growth that you have currently expected to continue as well? Because execution, according to you, do you feel that there can be a lot better, that the supply right now is more of an issue compared to the demand?
So, a couple of things. To your first question, Puneet, is on the demand side, we don't see anything subsiding or reducing, whether it's the domestic demand or for the exports. As you know, we are balancing the two. So the pipeline for orders continues to increase. We still have to pick and choose which order to take, which one not to take. And coming back to your second question in terms of execution, I think we already speeded up our execution framework. Just a year back, we were about 22,000 MVA, and today we are already at about 75,000 MVA. So in about 4 quarters, that's the kind of speed we are done. So I think as we talk more and more to our customers, I think they're very comfortable in terms of the way we are delivering the thing. So the lead times are getting better, definitely. And in terms of order pipeline, I don't see a concern there.
Mr. Kaul, the other one, and this one's also the fairly larger one, your industrial system business as well. Now, if you can mention that, how should we look at the margins for this segment? Because you already implemented, I think, a price hike of almost 17% last year, another 5% that you've taken this quarter. Is that enough to help that margin growth for this business? Because compared to the power systems, of course, this business has a smaller growth in terms of revenue. I think in the high teens, high single digits, low double digits that you are seeing. But how should we look at the margins from this business going forward?
So I think honestly, if out of industrial, the biggest portion is the motors piece of it, and I'm still very bullish about it. And it's not the pricing game only. Of course, the margins are dependent on a couple of factors. One is your pricing, of course. If there's an inflation, how do you pass it on to the market? That's one piece of it. Second is your productivity improvement. How do you eliminate the waste in the system? And number three is your innovation and R&D setup, and that's something we are accelerating our journey on. So we are not still declared, but starting, I think the lead time of each new motor, IE3, IE4, and even going up to IE5 motors, which are high energy efficient motors, uh, from August onwards, we are starting rolling out, models and frames. And over the next 12 months, we should be able to complete the entire frames of the motor portfolio. So I think having higher energy efficiency, better cost of manufactured products, and also making sure that you keep a balance on inflation and making sure that top line margin expansion is taken care of by passing it on to the market.
Well, that was the management of CG Power. But Saurabh, before we go ahead, a very quick view of how you looked at the results. I think the street was slightly more disappointed with how the profits as well as the margins turned out. What's your view?
I think the point is if you look at the valuation, it is quite asking. I mean, trading at 100 times to trailing earnings, and I think on the PB side, it is above 20. So, as the management has already said that there has been some kind of a delays, and because of which I think market got disappointed. Actually, what has happened because so much re-rating has been happened in view of the forward earnings which are likely to come. Any disappointment on that front may take stock stock may see some kind of a correction because of this and may see some kind of a consolidation going forward also.
All right. Okay. So that's the view coming on CG Power. The next one that we have